Hey everybody, this is Jim at SP500Chart.com. It's 4:15 in the afternoon here on the east coast of the U.S. on 6/6/2013, June 6th, 2013. And we are going to use some time-honored techniques to try to understand these modern markets. Had some pretty expected results today. But before we get into them, I need to remind you, as always, the website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look and see what took place today. Okay. We're looking at a 15-minute chart, and the first thing I want to show you, we're going to change the color of this line. We're going to make it purple because really it's kind of functioning in our chart here as a neckline. And since it's functioning as a neckline, for some reason purple is the color that I always seem to gravitate towards for necklines, for whatever reason. If we take a measurement of the height of that neckline, we end up with this little measuring stick that, if we add to the spot at which this neckline broke on the 31st, or was it, yeah, the 31st of May, we got a breakdown, then we got a perfect back test to that neckline. Then the S&P started to head back down. Now, we've been talking about this for a while, and don't get the wrong idea. One thing I want to say, even though today seems to be a fairly important turnaround day, let's not lose sight of the big picture. And part of the big picture is that there is more to be overcome before we say the S&P is starting a new leg up than just what happened today. But this was still something I think we should take note of. and here's why. First off, and I promise you, I have not jerked around with any of these lines on this chart except for these two orange ones, which I moved around a bit. And matter of fact, during the morning hours, I even posted on our little forum there. And there's not very many people on the forum, guys. Come on over to the forum. It's not going to hurt you to sign up. And I know there isn't a whole bunch of chatter, there isn't political talk and stuff. Just really when people feel like, hey, this is something that I think is going on in the markets, you got some pretty well thought out people adding their opinions. So come on over to SP500Chart.com, if for no other reason than to check out the little forum. It's called the Technical Traders Think Tank. So, as we look at what happened today, oh, by the way, it's the Technical Traders Think Tank. And then we have, what is it, the Daily Free-for-All or something like that. That's where we just bounce ideas off each other. But anyway, this morning I got on and I said on the 5-minute chart, we're changing this top line right here because coming into today, we had this. And that's not a bad line, okay? Don't get me wrong. I'm not saying that was a bad idea. But when I saw the downturn here, I said, you know, I think this actually needs to be slightly adjusted rather than calling this day out of bounds and these three little peaks, boom, 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 as the defining elements of this channel. I think we need to go with this and this. And you can see that right after lunchtime, the S&P turned around and started to attack this line and ended up in nice positive territory, whereas at one point the markets had been down about, 8 or 9 points? So that's better than a 20-point turnaround. And what's really interesting is, and I mentioned this in yesterday's video and also in the notes, that there were multiple reasons to think that at least there would be a short-term bounce at this line that's at approximately 1598 or so. What is that? That's really bizarre. There. So, and I won't bore you with those reasons again. Oh, yeah, I will. We got a couple things going for it. The first thing is this line had been resistance on 2 occasions back in April. The second reason is we would expect some what's known as gap support. Once this gap up on May on the 3rd of May, once that gap up got filled, and again, don't misunderstand me. I do not believe in gap filling. I don't believe that there was this vacuum mystery force that was sitting back here at 1598 and it just said, I'm going to just create some kind of black hole and I'm going to suck the price right back down to 1590. I don't believe in any of that. But what I do believe is that when you get the natural fluctuations of price movement, when you do fill a gap, there tends to be buyers waiting in the wings when you get down to the level that they missed the gap up. So here we have another reason. And finally, the third reason is that light colored line is also, that light colored red line is also the line that is drawn across our 2000 and 2007 market tops. Folks, that line, let's zoom in here just a bit, if I can. Hold on. That line, here it is, right there, got taken out by about 100 points. Not quite, but close. And I don't think you can ignore that. So there were a number of reasons to believe that that line would be technically significant. And there's the bounce on it. Now, you did see me move it just a little bit. I'm telling you, it was at 1598. Let me just double check to make sure I get that in the right spot. 1598, that's good enough. We bounced exactly on that line. Now, going forward, does that mean, hey, bye, 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 with reckless abandon? No. And here's why. Even though we have bounced on this line, and even though we have taken out this little short-term channel that we spotted on the 5-minute chart, even though we've done that, we are still in a broader channel defined by these 2 blue lines. And until we get over this line right here, I'm not quite satisfied with the idea that the selling is over, because we've had 1, 2, 3, 4 tops, each one decreasing. What we need to break that trend. And if the S&P can get up to 1650, then maybe come back down 1620 or so, do another little back test on this top line, then I might be feeling significantly more confident about what we saw today at this bounce here as being a legitimate turnaround in the larger picture. Because what I'm looking for is I'm looking for something that will turn around and start to come up and set new highs over 1700. And if this is a technically significant move over that 2000, 2007 trend line that I'm highlighting right here, then we're not just going to stay over that for a month and then go head back down. But until we see that this downward trend to this line is over in a more definitive fashion, I'm not prepared to make that call. certainly what we saw today lends credence to that idea. But it in no way can be taken as all the evidence we need to make such a call. We know, in other words, this would have had to have happened anyway for us to head back up and set new highs over 1700. But that alone does not create a reasonable expectation of that. What would create a reasonable expectation would be a breaking of this descending resistance line. Maybe another back test. Maybe on the back test is when you go long in a more serious manner. Then a resumption of an upward trend. So a very nice day. If you're a bull, you didn't like the sell-off to start the market off with, that's fine, I understand. But a nice little turnaround that I think is certainly we should expect this move to continue up into the 1630s. I don't have any hesitation if in saying that I believe that is now a very reasonable expectation. But to get over this line at some point is going to be the real key for us to know that what we saw today was a bottom of technical significance that will last for a new leg up that should be taken out 1700. Finally, I just want to say one of the ways I'm playing this bottom here is in individual stocks. I've been watching a few stock charts for a while, and I did some buying yesterday, and well, I didn't do any buying today. I did my buying yesterday and was just prepared for this little dip today for it to not freak me out. So anyway, there you have it. That's the video for June 6, 2013. Hey guys, thanks for watching, and I'm sure there's some guys and there's some girls, men and women. My thanks to everyone for your support, and I wish you the best in the markets this week. Let's see what the rest of the week has in store for us. Thanks. Take care.